Hello and welcome to this month's edition of The Benchmark, specifically looking at agricultural volatility and other key events that are happening at the moment. My name is Peter Storey. I'm the head of prices for food and agricultural commodities. I'm joined by Aled Thomas, who is our principal analyst for food retail and manufacturing. How are you doing today, Aled?
I'm not too bad, thank you, Peter.
Good, good. So I wanted us to begin with the EU trade situation with various different countries and blocs. So it seems like the situation between the US and the EU over Greenland has sort of simmered down a bit after a couple of hair-raising weeks, but it did seem like that threw into question the agreement from last year, which settled a lot of trade issues between the US and the EU. So is that still a bit is that still being called into question, or is it reverting back to how it was before the dispute?
I think we're still relatively in a bit of an unknown period. On Wednesday, the 21st of January, the European Commission were expected to vote to suspend any new agreements with the US and perhaps the existing agreements that were in place. I think we're still looking to see how the Trump administration plays out with how they're going for the Greenland issue. Of course, they were quite strong and now they've rowed back. But I think it's really made the EU question whether they want to be strong and consider these partnerships with the US and whether they should focus on other agreements, as we've seen in recent weeks, such as the EU-India deal and also the EU-Mercosur deal. And perhaps they're shifting their focus away from the US, notwithstanding that they won't want to continue that deal because any trade deal is good for them and good for business.
I mean, I guess time will tell if really that ratification takes a bit longer than we were expecting before everything kicked off.
I think it's time will tell in terms of taking that ratification as to whether EU member states individually agree, of course, because the Commission would need the majority support of member states, but also how Trump is sort of putting specific tariffs on certain member states, not just the EU. Of course, he's lashed out at the UK. Of course, we're not part of the European Union anymore, but specific states within the EU member, the European Union, he's also specifically pointed them out. So how they react to this might impact, of course, how the European Union and the Commission as a whole look at Trump and the Trump administration going forward.
Okay. And you mentioned briefly Mercosur and India. Now, certainly India was big news in the past few days just because of the announcement of a free trade agreement with the EU. But so how are things looking for that and the impact on agriculture and also for Mercosur and the ongoing ratification process for that deal?
So the India-EU deal, I think Ursula von der Leyen described it as the mother of all deals. I think the two blocks, I should say, together make up around 25% of the world's GDP, around 2 billion people. A lot of people will be impacted, in a sense, by this deal. But having looked at it and looking at the figures and what's actually affected, the reality of how much effect we might see on agriculture might generally be not a huge impact of some of these other deals, and that's predominantly because, of course, India, such a large agriculture region, want to protect their domestic side. They've had issues in the past, as I'm sure we've discussed before, around domestic costs, domestic inflation. They don't want to do anything to rise that up because it's quite a political topic.
Yes, I mean, for both sides, really.
Of course, for both sides. So I think we may see other factors, such as, there's security guarantees in there, automobiles, vehicles, equipment. We'll see better trade and perhaps cheaper values coming through. But the reality of a big impact, I think, on agricultural commodities is probably not the forefront of this deal.
It does seem like, from what I have seen, that the agricultural commodities which are being mentioned are ones where the EU has maybe not a monopoly, but it's a commodity that India doesn't really produce, like wine or olive oil, things like that, where the EU has much more of a stake in that market than India.
Yeah, and don't forget, of course, the EU and the EU Commission are very pro greener policies, sustainability policies, and how that really plays out, just thinking of something we've discussed previously around the European deforestation regulations, anti-deforestation regulations, I should say. how can they sort of square that off with what they're doing there with India, perhaps where there might be some concerns around those sustainability aspects and pesticide residues. The EU is incredibly strict on things like that. So I think perhaps they've stepped back slightly from the agricultural side because it is such a hot topic, and perhaps their missions don't necessarily align with each other and focused on the other things, which ultimately may have a positive impact on agriculture in the long term, but not as direct as we've seen.
And yeah, what about Mercosur then?
So Mercosur, after around, I think it's 2 decades, it's been called into question. They're finally now come to the agreement. I think it's just pending the final sign-off to that. Not every member state were in agreement, I think it's fair to say, but again, the reality of how impacts might be on agricultural commodities, just thinking specifically in Mercosur, Brazil and Argentina already face some tariffs aside from this agreement, and I don't think this agreement sets a difference to them. S&P Global Energy don't expect a massive boost in trade, certainly in 2026, as these policies always take time to filter through by the time they get their ratification. But the reality of the logistics and competitive non-Mercosur origins for things like corn, soybeans, I don't think we'll see a huge boost of these agricultural products coming into the EU, predominantly just because it is such a fast-paced commodity market. The non-Mercosur origins will likely drive that as opposed to Mercosur themselves.
Okay, well, thanks for your insights on that, Aled. So, sticking with Mercosur, obviously we're entering sort of the peak agricultural period, I suppose you would say, for the southern hemisphere. It's very much the height of summer there now. So, for the big hitter in that region, Brazil, what are we sort of seeing in terms of crops as we're finishing off on the planting season for things like corn and soybeans, and we're starting to enter into not quite into full flow of harvesting, but we're starting to steadily head towards it.
So it's been a very positive year for Brazil, certainly so far. Adequate rainfall in the main growing regions has really been a boost to things such as soybeans, corn, and even to coffee in some aspects as well. In terms of harvesting, though, we're now coming into that peak. Perhaps when we next catch up will be full flow, if not finished. But around 6% as of January the 21st was harvested of soybeans in Brazil, and predominantly a lot of that was done in Mato Grosso, and of course
the big state.
The big state. So things are changing, but in terms of then the condition as well, we are seeing Brazil at a soybean crop condition index of 91.7, which is higher than last year. It was 90.9. And I think, again, that's predominantly down to the right rainfall at the right time during the crop production cycle, which has helped. We, as in S&P Global Energy, have raised our production estimate for soybeans by 4.5 million metric tonnes to 184 million metric tonnes for this crop production cycle. That is above the USDA's WAY's January estimates, but it is our view that they're actually being quite conservative with their estimates at the moment, and we expect ours perhaps to be more accurate.
Okay, so really it seems like all conditions are quite positive at the moment. There's no cause for concern. So on that basis, are we expecting to see bumper exports for things like corn and soybeans, and yet even a robuster coffee going into 2026?
Well, we already saw in December a sort of record-breaking month or record-breaking round up to the year in terms of soybean exports, which were up 10% on year, and predominantly, of course, a lot of these exports went to China, some to the EU. Around 80% went to China, actually, so a significant amount. But we saw a record-breaking 108 million metric tonnes being exported last year.
Huge amount, really. And lastly, Aled, I just wanted to turn towards food inflation, which is, of course, is a big hot button topic, certainly for many countries which have been exposed to it in recent years. S&P Global Energy's food and beverage price index, it generally decreased for the vast majority of 2025 on lower grain prices, on the whole lower meat prices, but it certainly seemed to uptick towards the end of the year. So are we seeing food inflation really filtering through on for some of the key countries that we're monitoring?
Yeah, I think it's an interesting one to look at. Of course, in our latest predictions paper that S&P Global Energy have produced, we forecast that food inflation broadly will be pretty tame in 2026, and I think that's a fair assumption so far from what we've seen, and the kind of the big rises or dips even have been quite specific either to a commodity or to a country. Of course, heavy buying in November, December on the run up to the holiday Christmas period in most of Europe and the US will inevitably put a bit of pressure on inflation to bring it up. But in terms of what we've seen in the latest set of inflation figures that came out in December, which came out last week for December, I should say, inflation is again it is holding firm, but also is falling in some places. We're seeing actually deflation in India, for example, but then again we are seeing quite strong inflation here in the UK. But a lot of that was questioned around. There have been some quite significant policy changes during 2025 on things like food and tobacco as well. Tobacco duties have increased, and that kind of flowing through into the inflation figures. So we still need a couple of
less
months.
about the fundamentals and more about politics, I guess you
No,
could say.
absolutely less about the fundamentals. And of course, we have seen in the US the inflation figure rose quite significantly in December for food, but the reality was it was an incredibly low figure in November, and there were no figures to compare to in October because of the government shutdown. So I think we still need perhaps a couple more months to see the direction that inflation is going, but certainly of kind of your major GDP countries, it does seem to be broad-based and broadly stable. One interesting thing to note, I think, is China is seeing some quite significant inflation at the moment. I say significant, it's only around 1.1%, which is inflation we could only dream of here, perhaps in the UK. But I think it's quite notable because that is significant for them in terms of how they're seeing that increase, and that's predominantly driven by, fresh fruit and fresh vegetable prices, and that's really what's pushing things up over there.
And what exactly is normal in China for food inflation?
Well, the 1.1% that we've seen in December is actually the highest figure, was the last seen at that level in November 2024. So it's not necessarily uncommon to see that inflation figure, but it was just notable that it's not been that high for over 12 months. I think, here in the UK, of course, we have a base target of around 2%, so anywhere circling around those, whereas in China you expect typically less than 1%.
Understood. Well, thank you very much, Aled, for those insights and for your time in general. And thank you everyone at home, on the commute or in the office for watching. Hope to see you again soon.